Investing. I'm Edward Brown, your host again. We asked this trivia question. You mentioned what was the name Brian manager at Central Park. We're in the studio here with on the TV Randy show Williams, who is the founder and CEO of Keiretsu Form, and
bleach blonde guy.
The bleach blonde guy. Welcome to the Best of Investing. I'm Edward Brown, your host. Here's our format. A bunch of guys sitting around a bar. There's no bar. Having drinks. There's no drinks either. But we're talking business, and you, the audience, are listening in. Best of Investing is actually a radio show that has been around since August 2010, and it airs every Saturday on Fox News Radio, 9:10 a.m. at 1 p.m. Now, we're not a political show. We're strictly business, so everyone will be happy with that. We'll have various speakers, guest speakers, attorneys, accountants, economic advisors, business coaches. I have great co-hosts with me, Mark Hanf of Pacific Private Money and Brian Burke of Praxis Capital. Now, the cool thing about this is that you're actually getting to see scenes behind the scenes. So we all have headphones on because we're recording a radio show that is going to be airing on the air on radio. But in addition, you get to see what happens during the commercial breaks, how we prepare for the next segment. So it's a lot of fun. There's going to be a lot of levity because I like to try to throw a little bit of humor in there because, you know, just business by itself sometimes gets a little boring. So you got to always kind of break things up. Remember, I'm Edward Brown, wishing you the best of investing. Are you ready? Let's go. Welcome. You're listening to the Best of Investing on News Talk 910, sponsored by Pacific Trade Exchange. And Brian Capehart will be here in a couple of segments. So first of all, let's just introduce ourselves. I'm Edward Brown, and I'm here with Mark Hanf, who is the president of Pacific Private Money, California's fastest growing private lender, and Brian Burke of Praxis Capital. And for those of you listening for the first time, here is our format. A few guys sitting around a bar having drinks without the drinks. And what is our show about? It's about real estate, the financial markets, and other economic business of the day. And let's see, what do we got here? Okay, our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco, and the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Today's trivia theme is board games. I'll ask the question, and you guys are going to name the board game.
You ever get bored playing games?
Not these kind of board games. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show, and in the future you can always go on to a website called dar.fm and record this show. Quick reminder again, World Wraps in Corte Madera and Santa Clara is giving our listeners a free smoothie with purchase of a wrapper bowl. If you mention this show, The Best of Investing, go there for lunch today. They just added this awesome Polynesian pulled pork wrap. I tried it. It is phenomenal.
Sounds great.
It's awesome. Don't forget to mention Best of Investing for your free smoothie. And since our guest is not here yet, Brian and Mark, tell us what are going on in real estate, since there's 2 of you.
I guess, yeah, there's a lot going on then. Yeah. Well, you know, Mark, I just read today that the LPS came out with their latest delinquency and foreclosure numbers, and they're reporting that loans that are delinquent have declined from in January from December, but that the percentage of loans in foreclosure actually increased a little bit. And as I think about these numbers, it seems to me that as the foreclosure numbers increase and the delinquencies that are your future foreclosures are decreasing, don't you think that spells us getting close to the third quarter of the foreclosure crisis?
I agree, Brian. I think clearly the numbers are indicating, light at the end of the tunnel. We're looking at a lot of decreasing rates in terms of new incoming delinquencies. Now, of course, the first question will be, well, what about all that shadow inventory? And yes, of course, we've got a lot of inventory to work through And the good news is the banks are starting to process that and are putting that inventory back out onto the market through both the auction sales and through REOs. And I think what we've seen, the evidence of the last couple of years, is there's just not going to be a tsunami. We're going to see that inventory trickled out over time, and we've seen predictions of anywhere from 2 to 5 years in terms of how long are we going to see this market where we have kind of a steady supply of foreclosure or distressed properties. I think I don't think that's necessarily a bad thing. I think the banks have figured out a way to stem what we've seen several years worth of deflation. And gosh, some of the numbers that came out this week also indicate that sales are up volume year over year,
Yep,
and prices
that's right.
are up slightly year over year. And so I think as much as most of us in the if not all of us in the real estate industry have been hoping, praying that, gosh, will 2012 be the year we hoped 2011 would, I do think the indicators are that we are looking at a market where we've largely hit the bottom, and that we're going to see kind of a stabilization.
Well,
which is really what we
remember
need.
the government not too long ago announced that they were going to keep interest rates down through 2014,
Right, exactly.
right?
Yeah,
So
so you
that
gotta
should help.
Stability is the name of the game. I
But
mean,
jobs,
that's
you gotta have
that's what the
jobs.
public, that's what the consumers need to see. That's what real estate investors need to see, is stability in the marketplace. A year ago at this time, what were we talking about at this show? We were talking about all the articles that said that were predicting anywhere from 5 to 10% further declines in prices. You're not seeing those articles anymore. That is no longer the prediction.
Yeah, the decline already happened, so now that's over with.
It's,
So
so I think we're on the upside.
And the construction industry seems to be picking up. I mean, you
Little-
call
little
contractors
bit.
now; they're getting a little bit busier.
they are, and you know what else is happening is Goldman Sachs just reported recently that the inventory of existing homes on the market declined by 21% in the year to January. So not only are the delinquencies starting to decrease, foreclosures are pushing through, but the inventory on the market is beginning to decrease. And we're seeing that in the real world every day as we're out buying and selling property all the time. And we're noticing that the active available inventory is also on the decline.
Now, how much of that has to do with people deciding, you know what, maybe the market's going up for a bit, maybe we shouldn't sell?
Some of that maybe, but when you think about it, what percentage of transactions are normal sales versus foreclosures? And they've been running in the 50-50 range,
About 50%,
60-40 one way, then they'll be 50-50. So the 50% that don't have to sell, that could be impacted by some optimism and wanting to hold out and wait. But the 50% that comprises the foreclosures, they're going to put those on the market regardless. They're not going to hold them off. What they're going to do is they might hold off the foreclosure in hopes that they're going to get a better disposition down the line. But once they've foreclosed on that house, they're not going to just let it sit there in their inventory.
And I'd like to think that the banks, that there are some people with intelligence monitoring these numbers on the bank side, those that are in control of how much distressed inventory they put back on the market. We all know they've got a lot of inventory, and I'd like to think that given the numbers we're seeing, where we're seeing a tightening of supply, now's the time for them to start releasing and opening up, not the floodgates, but just open the spigot up a little bit, get some of that product on the market, and allow the investors to come in and reposition that real estate.
Yes, I think that's exactly what's going to happen, and they have a little bit more confidence in doing so now too, not only because of the market, but also because of the recent settlement between the major lenders and the Attorney General, that kind of now they've got this the question of is their paperwork in order and have they followed the proper procedures. They're getting that behind them. They've hired their staffs. They've staffed up to process the foreclosures. They've trained people, and they're getting to that point now where they're going to start releasing this product, but it's going to happen in a controlled and disciplined manner,
okay,
and that's
so
how it's going to keep the market stable.
So based on that, wouldn't you say that prices probably won't go up, they're just going to stabilize?
I think they're going to stabilize in the short term, but I think they're going to go up substantially over the 3 to 7 year time period. And nobody's building anything to add to the physical supply of inventory. So the only thing
Well,
you
not
have
yet,
going
and
on
also
right now
that's
is the
always a couple
foreclosures.
years behind.
It is.
Yeah.
In a couple of years is probably an optimistic statement, because in California, how long does it take to actually get a project from raw dirt to sticks in the air? That can take years.
It took me 9 months just to get a permit to put a birdhouse.
You're right.
And that was in the ground. That was to hang it from a tree.
Well, Brian, when you talk about prices going up, let's look at that a little bit, because we've talked about this in past shows. There are markets where homes are trading at significantly below replacement cost.
Yes.
And that's where I see the biggest opportunity for price gains. And I don't think I would even call that appreciation. It's really prices going back up to normalcy, because we're in an abnormal market.
And you won't get any building done because, again, if
it's below replacement cost.
Exactly.
There's no motivation.
Now that doesn't mean prices, say in Marin and San Francisco, are set to follow that same pattern, because we haven't seen such a huge price decline, but there's been such a pendulum swing in the opposite direction in certain communities in Northern California and the Bay Area that it's just not sustainable for homes to trade at the price per square foot that they're trading at.
Well, I call it a return to equilibrium. And
Yes,
when you look
yes.
at median house price in California is, in the mid 100s range, 140, 160, somewhere in that range.
Is that what it is now?
It's gotten that low.
Whoa.
In Sacramento, you can buy houses for under $100,000. And
Oh, yeah,
and
all
then
day.
but the cost to build a house is over $300,000 when you factor in the cost to put in streets, curb gutter, sidewalks, permits. A permit can cost you 70 to 80 grand.
Yeah.
So, and we're buying houses as rentals for as low as $80,000 in cities where it costs you $70,000 to get a building permit. You can't tell me somebody's going to come into that town and build more houses
Well, wait.
under those conditions.
Do you think that maybe the counties will wake up, like in Nevada? I remember they for commercial they started lowering the fees.
Some of them have. They've actually
For residential?
Several counties have been lowering fees in with the idea that they would entice builders to apply for.
well,
But
that
others
was
are
smart.
saying, geez, we're not collecting enough revenue. We need to raise the fees.
Well, but that's so stupid. They go back to what I said
nobody's
about.
paying it.
I mean, who was it? Ford that was having problems. I say, okay, well here, Ford. You know what? I can help. I can solve all your problems. All you have to do is sell one car. Just sell it for $2 trillion. But all you have to do is sell one car.
Right,
I mean,
exactly.
it's really stupid. Okay,
Yeah.
we are going to cut to our first commercial break, and here is the first trivia question. Again, remember the theme is board games.
Board games.
Board games. Okay, what board game involves solving a murder using weapons such as a candlestick or a rope? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What board game involves solving a murder using weapons such as a candlestick or a rope? 888-912-1190. Make sure to include your name, address, email address, and phone number, and make sure that you spell out your email address. And we will be right back.
Do I have a clue?
What's that?
have a clue?
Yeah, that's a good.
That's one of the few board games I
just
actually
want a
like.
clue.
So you don't have a clue?
I don't have a clue. But can somebody give me a clue?
Okay, well that's a good. Oh, we're gonna do that.
I got a clue on that.
See,
So it's interesting. It wouldn't getting back to the whole that price like a rubber band bouncing back in certain neighborhoods to to at least replacement cost. There are neighborhoods, and I keep thinking of this one neighborhood in Sacramento where I've done a lot of loans in. And the initial bottom in this neighborhood, and this is like North Highlands, Del Paso Heights. There's a whole zip code there of thousands of homes that had its initial bottom in 2009. And I know a lot of guys that went in there and bought. And then it actually started to go up in 10. And then we had this double dip. So in 11, it went back down, and even in some cases went lower again in 9. But and everyone's going, woe is me, and I'm even in some, I put some people in loans where I can't get them back out anymore right now because the properties aren't appraising. But, it wouldn't surprise me that in a very short period of time that those homes would suddenly go from, they were trading, in the 100s, then they went down to the 50s in 09, then they went up to the 70s, then they went back to the 50s, and in some cases the 40s last year. It wouldn't surprise me to see those properties going right back up to 75, 80, maybe even 100,000, because again, these are 1,000 square foot, 2-1, 3-1 homes.
And it cost you $200 grand or more to build it.
Yeah, absolutely.
Yeah.
So there's just no way that those prices ultimately aren't going to bounce back, and it may happen relatively quick, because once the new inventory of distressed properties start to dwindle, boom.
What about a double dip recession?
No, I think we're beyond that.
I think we're past. Well, we had our double dip in housing already.
Yeah, we had the double dip in housing.
So
yes, we
I
did.
think
fourth
I think
quarter
if
of
we have-
11 was horrible.
If we have a double dip in
You already have this, right?
In the overall,
I'm ready now.
You ready now?
if we have a double
missed
dip in
it?
the overall economy at large, it's just
Yeah.
going to cause further stagnation.
Yeah,
It's
yeah.
not going to cause the prices of housing to drop more than they've already done. I don't think.
I don't think so either. I think we're.
Okay, one. Now I gotta do it slow or fast. 1, 2,
I think we have a little
3.
stagnation.
Oh,
At least
yeah.
it's not
Wait, wait.
stagflation.
Now you have
Right.
to do it twice.
They're gonna happen. Yeah.
Oh, any hair?
Very little. Fortunately, I got the stickers.
Okay.
All right. Let me
Okay,
get a
guys.
little bit of water here. I'm ready.
Hold
Yeah.
on here.
Any other goodies in there? I see you scrolling through.
I
I
know.
wish I could get that blog shelf. They just don't. I haven't looked.
I'm
Maybe
just
they, I
amazed.
was waiting for them to put it back on
Yeah,
again.
he should be here in 5 minutes. We could be.
I wish there was a way to like.
We
Well,
can hang you off.
you know what?
Kind of hang you off the roof.
There are some blue buttons on some of these where for the firemen to
Yeah.
punch
Really?
out. Yeah, but these don't open,
Yeah.
and I don't have any scaffolds.
So we're gonna go into email time then.
That would be an excellent
Let's
idea.
do email time. That'll take up a whole segment.
Yeah.
All right, I'm ready.
That's ready. Okay.
So if he comes in, do I just go?
Actually,
Yeah.
You know what? You could probably just leave it just like that. I don't think it.
Or close it a little bit.
Do it. Is that fan making too much? You know what? I'm gonna turn off the fan
I'll get it on.
I don't hear
You
it,
gotta-
but
you have
I
to-
don't hear
You have to
anything.
climb a mountain to get to it.
because I don't think it's that warm right now.
That's fine. Yeah.
Okay, so that was seconds here. Okay, you guys ready?
Yep.
Ready?
Make sure I got my question here. Okay, so when I come back to you, I'll say, Brian, what's the answer? And you're gonna say,
Can you
I don't have a
I don't
clue.
know.